What's up, party people? All right, so Jay asked a question today in my Facebook Live about, hey, can you go over scheduled roofs? So, first and foremost, what's a scheduled roof? All right. When you look at insurance, the whole job of insurance is to put you into your pre-loss condition. So, you're going to hear that a lot, right? The job of insurance is to repair or replace damaged or destroyed things, right? Cars, roofs, whatever the case might be, in your pre-loss condition. So if we're being really honest about insurance, the whole job of insurance is to replace whatever useful life is left. So let's look at an example, right? So my keyboard here, right? Useful life is probably like a week, but let's call it a year. I've had it for 6 months. So I've used 6 months of its useful life. Insurance really should give me half of the cost of this keyboard if something happens. So that is really what insurance is. Now, when you look at some of the policies, they have what's called replacement cost value, or RCV. And RCV, honestly, it puts you into a better condition than you were before the loss. So it's really not insurance at its core, but it's a nice feature, right? So when insurers are fighting each other for market share and they're trying to make their policies more attractive and they're trying to attract more consumers to their insurance company, they may do things like that, right? They may say, hey, we're going to put you in a better position than your current position is with the age of your roof or with the age of your fence, right? So we have replacement cost value for our fences. Some of our policies have replacement cost value for your personal property or contents, right? So when I see somebody with a scheduled or an actual cash value settlement, it's called settlement, on their policy for their personal contents, I'm like, all right, so a couch might have a useful life of like 10 years. And if you've had that couch for 5 years and you have actual cash value, which half of your couch are you comfortable not living with, right? But I digress. We're talking about rooms today. So you really have three settlement options, and that's what they're called. They're called settlement options. So you have really actual cash value, ACV. That's my least favorite because ACV is very subjective. So the claims rep, the adjuster gets up on the roof, kind of kicks around a little bit and looks at how much granule loss there is and all this other stuff. And I'm like, I think you got about 5 years left in this roof. So holy cow, 5 years left. That means that you're only going to get like 5% of the cost of that roof. You're going to pay the other 95%, and then you still have to pay your deductible. Remember, to get your stuff back, you've always got to pay your deductible. So ACV scares me, right? Then you have scheduled, and scheduled to me is kind of a pure form of insurance. It's supposed to put you back in your pre-loss condition, and then you have replacement cost value, which you just pay your deductible, and then the insurance companies will pay whatever reasonable expense exists to replace your roof. But again, I digress for 3.5 minutes. Jay asked, tell me about scheduled roofs. So how do I know if I have a scheduled roof? This one's tough, okay? So insurance companies have gotten a little tricky on how they do this. So I read a policy recently that said your roof has replacement cost value based on the schedule below. What? Talk about lawyers building contracts, right? So that's a scheduled roof. It says replacement cost, but if it's based on the schedule below, then that's not replacement cost value. That's a scheduled policy, okay? Another thing that you'll see on a lot of policies, you see these on the declaration pages, you'll see we show your roof replaced as of 2020. So as of this year, you have 97, 96. Hold on, I'm trying to do my math here. We're going to lose 9%. So you have 91% replacement cost. So if you see a percentage, you're going to know that it's scheduled, or it's flat out going to say based on the schedule attached to this policy, that's how we're going to settle your roof. So every insurance company does it a little differently, so sometimes people don't catch it. So how's that work? I'm going to try to use threes because that's a lot easier. So right now, your average roof replacement is going to be somewhere between $30,000 to $40,000 on average. Now, there's a lot that goes into that. How many materials do we have, right? Or are we in a shortage? How much labor do we have? Are we in a shortage? What's the cost of these things, right? So There's different variables in there. You as a consumer, what you pick, right? So if you go with a really expensive architectural shingle, maybe an impact resistant shingle, you're going to have some say in this. But let's just call it $30,000. So I'm buying a roof and it's $30,000. Okay, so I live in Richardson, Texas, and I got hit with hail a week ago Monday, and my roof is getting totaled out, and my nice neighborhood roofer comes by and says, "Hey, it's going to cost you $30,000 to replace your roof." So how does the schedule impact that? Well, there's a couple of different costs that we need to be aware of. So the first one in my mind is the deductible. I'm sorry, I had to think. My speaking spell's not working today, so I had to stop for a minute to try to spell that properly. So what's my deductible? So if I have a $300,000 home, and let's say that I've got a 2% deductible, because a lot of companies are going to 2% deductible, well, then I've got to pay $6,000. So just like when you go to the doctor and you have to pay the first $120 and then your insurance takes care of the rest, the deductible is a first dollar claims payment, right? So I'm going to just pause real quick here. If the repairs or the damage don't exceed the deductible, then you're going to get a zero pay deductible. I'll go into that in another vehicle, but another video. But just know you got to pay your deductible. That's going to come right off the top, right? So that's the first number to know. Second number to know is your schedule. So if I have a roof that's, let's say, we'll just go with that same 3 years old, I also have to pay 9% of the cost of the roof. So my deductible is attached to whatever my insurance policy limits are, whatever my dwelling value is, whatever my reconstruction cost is, how your declaration page talks about that, your coverage A, your dwelling, it's a percentage of that. The schedule is a percentage of the cost of the roof, right? So if I'm looking at a $30,000 roof and I have to pay 9%, that should be somewhere around $2,700. So I'm hoping I'm doing my math right here. I'm actually going to pull up my calculator to make sure that I'm not lying to everybody, but I'm pretty sure that that's what we're looking at. So if we can just find Mr. Calculator here. There he is. He's hiding behind my video screen. We got $30,000. We're going to multiply that times 0.09%, $2,700. Thank goodness. My grad school instructors would be happy. So what does that end up looking like? I got to do $30,000 for my roof, right? I got to pay my $6,000 deductible. So that's going to take me down to $24,000. And then I have to pay my $2,700 for my schedule, right? So when it's all said and done, I am definitely using the calculator for this. I know that's $21,300, but I'm going to check my math always because I don't like lying to people. So we're going to go 24,000 minus 2,700, 21,003. All right, cool. So my simple math skills work. So this is what your insurance company is going to pay, and you're going to pay these right here, right? So you're going to pay $8,700, and your insurance company is going to pay the balance of $21,300. So what's the kicker here, right? The kicker is a lot of people think that they're paying $6,000, and in all actuality, they're paying $8,700, and they're not necessarily prepared for that. So that's kind of kicker number one. Kicker number two is that each year that 3% is going to get bigger. So in North Texas, we expect you to replace your roof every 7 years, right? So over 7 years, all of this changes, and that $30,000 roof is going to cost just a little bit more, right? So if I have to pay for 7 years of that scheduling there, and I have $30,000, and I have to pay my 21%, right? 3% for 7 years. That means I'm going to have to pay $6,300. Okay, so I'm going to have to pay $6,300 Plus, don't forget, I always got to pay my deductible. So I got to pay my $6,000. So now I have to pay $12,300 when all I thought I was going to pay was $6,000. So now this roof is costing me 17,000, or I should say the insurance company is paying $17,700 and I'm paying $12,300. I'm getting very close to that point to where I'm sharing the cost with the insurance company. Now, is that a bad thing? I'm sure everybody watching this video, if you watch this video, if you've made it these 10 and a half minutes thus far, right, you're like, what? Like, ribble rabble, like, are you kidding me? This is terrible. Maybe, right? Maybe yes, maybe no. And the reason I say it like that isn't to be dismissive. You just have to know the math, or you just need to work with somebody who can help you discover the math, right? Because if I know that I have to pay $6,000 no matter what, and this same roof with RCV is very, very easy. So if I have replacement cost value and I've only got to pay my $6,000 deductible, right? Then the insurance company is going to pay $24,000. I'm only going to pay $6,000. That's a pretty good deal, right? But that's baked into your rate. So the insurance companies know this, right? Insurance is nothing more than math and statistics. That is all it is, right? It's just math and statistical probability and outcome. So my rate for this might be $1,500 a year more. And again, I'm just using a number, right? $1,500 a year more. So if it's $1,500 a year more, how many years do I need to go claims free to make up that difference? Because no matter what, I'm paying this, right? No matter what, I'm paying my deductible. So if I come over here to my handy dandy cheater calculator and say $6,300 is how much more I'm going to have to pay with the scheduled roof, and I'm saving $1,500 a year, well, then I need to go 4.2 years without a hail claim. And if I can go that far, which we're in North Texas, so who knows, but if I can go that far, now I'm winning, right? Like now I'm saving money on that. So I did this in a Loom just because I couldn't figure out how to make my Facebook Live camera face the right way so that these numbers aren't backwards. So hopefully you're watching this. Hopefully this is informative. But remember, it's about you. It's about your appetite for risk. And it's about the math, right? Because the math is already baked into your premium, more or less, right? Rates have to be fair, reasonable, and adequate for the risk that they cover. So is a scheduled roof for you? Is a replacement cost value roof for you? Do you want to think about it? Do you just want to pay whatever and not have to think about it? Sometimes that's the more costly option, right? Sometimes it's a more costly option to not educate yourself and to not understand your options. Most companies are reverting or converting to a scheduled roof no matter what at a certain age. So for most of my carriers, it's about after year 10. So in year 11, you're automatically going to a scheduled roof. Now you're looking at 33% that you're going to pay. But most people are going to have their roof replaced before that, just based off of the weather patterns that we have here in North Texas. So I hope this is informative. I really appreciate you watching to this point if you did. And again, if you want to hop on a phone, if you want to talk about these things, please give me a call. That's why I'm here. We can hop on a video call. We can hop on a phone call. We can Zoom it, whatever the case might be. But Jay, thanks for the question. And again, hope this helps. Talk to you guys later. Have a good weekend. Be safe.